Hi, Bo here from High Tech Investment, and welcome back to the channel where today we're going to talk about portfolio management. So this is now the third video in a whole series that I've been making, basically from basics all the way up. In this particular one in here, it's all about trying to compound, trying to increase your portfolio without increasing your risk. We have quite a few tips for you in this particular video in here, trying to show you exactly what we do in order to increase our portfolio, to make it escalate, not only obviously with the increased percentage that it gives us every single week, every single month, but there's also a way to further increase this to make sure that you also spread your risk over different platforms. So in the first video, which is the one you see on the screen here, is very basics, what you need to be aware of when you set up your portfolio. There's quite a few things that needs to be in place. Once you have that, you can go to our second video in here, and that then takes this step a bit further, and now it leads up to basically the video that we are doing here at the moment. Some of the key points in these particular videos in here is basically you need to spread your risk. Don't put all your eggs in one basket in here. Spread it out over different types of EAs, over different types of EAs that work in different types of environment here also. And obviously the one that I like, safety in numbers. We also bunch some of them together in various groups, and that also helps us basically take up the slack or the drawdown that one EA can have. The other EAs will help at the end of the day if you have done it correctly and set it up as we basically suggest. So let's get into the video and see exactly where you can improve. So the first thing we have to do is identify your profitable accounts, which ones you want to use. For high-tech investment purposes, we have more than 100 accounts over multiple different EAs. We have, some of them have 16 different account settings for one EA, other ones have 22. And it's all about trying to find the best ones in here, not to trade all of them at the same time, simply handpick a handful of them, so 4 or 5 for a setting for an account in here. So you have to regularly assess the account performance, see how they are doing, and then you focus on return on investment. If you have seen what we do on some of the robot settings, then we compare the drawdown versus the profits, and that particular factor here determines which ones that we have. We also have a part when it comes to the win rate. That is not so dominant for the grid trading, because normally the win rate is quite high, somewhere around 65 to 70% on most of ours. But it could be on the simple RSI trader that we have shown you a couple of data on for some other videos in here, where it only does one trade at a time on overbought, oversold. So there you want to have a high win rate, hopefully above 80%. And then you have a drawdown level, and that comes more back to the grid trading EAs. You want to try and limit that. So that is your main focus. And obviously for this, you need some tools also. You can use your MT4 platform, but it doesn't really show a lot of details. And one of the ways to do this is the FX Blue. And we have all our trading accounts linked for FX Blue. We have individual accounts, and then we also gather them up in portfolio so we can see the overall profits and also the drawdowns, as you'll see here on your screen. It'll tell you all the margins, it'll tell you the total returns, everything else that is in there. And based on this, you then have to do a consistent review. You have to set a schedule to review your accounts. It could be weekly, it could be monthly, it depends on exactly what EAs you're having. We are doing this on a weekly basis. Every single weekend we are reviewing them at the end of the week, so we know exactly what we need to do over the weekend when we have the extra computer power. But if you have, again, like the simple RSI trader in here that only trades maybe once or twice a week, you might want to extend that to every 2 weeks, so bi-weekly, or still on a monthly basis. It all depends on the individual EAs, but review needs to happen for sure. So also the strategic profit allocation in here. So this is one of the key points. So you have to determine transfer amounts. So basically the profits that you are transferring out. So you are grabbing your profits, you're setting up your accounts. And at the end of the day, you want to secure that profit also in case you are blowing your account. which obviously shouldn't happen in the first place if you have listened to some of the other things that we have in our other videos in here. But one way to do this, as I have set up 4 accounts, in this particular case, it's how we are actually doing it with $5,000 or 5,000 euros on each account. So you have 4 in there. As they grow, you are getting a bit of extra money at the end of the day for these accounts. You can see the first account here has made about 2,000. The other ones have made 1,000. And again, this is the account equity, not the balance. So once you have that particular extra equity in here, what you do, instead of increasing the lot size, which you of course can, and you can do that along the way, but then don't forget that when you remove your money, you then reduce the lot size also. You create an additional account. So instead of having income from 4, you now have income from 5 $5,000 accounts, and that will then make sure that you increase your overall profits, and you can continue to do that because now you have 5 accounts that again creates at some point 5,000, and then you diverse that over to the next one also. So it's important again to know exactly when you want to do this. So make sure that they don't have a negative impact. So that means that if you take it out from the balance instead, while you're having a big drawdown, then that is a definite no-no in here. So best way to do it is by account equity. That way you keep safe, because as we have in here, we normally have 5 EAs running $1,000 accounts. We put them together. We know they can run on $1,000 accounts. If something happens in the market, one of them is actually going beyond the $800 or $900 that will normally crash the account, there is still space that the other 4 accounts doesn't use. And because you're also diversified already for individual currency pairs, then they won't be trending at the same time. So that is an extra part. So this is the most important thing in order to basically compound your profits. Now, creating multiple accounts, I did mention here before, you choose multiple reliable brokers in here. Many people just going with one broker, which is also quite fine. If you only have maybe 5 or 10,000, that is quite fine. But as you are growing, you don't want to have all of a sudden 40 or 50,000. So with just one broker in here, you need to spread out also. That is part of the portfolio management. So spread out your risk to multiple different brokers, hopefully some of the good ones in here. And I have a list, and I'll make sure also the link is in the video description below. Some of the top 100 Forex broker trading platforms that we are using, also some of them. So the FP Markets is one of them. IC Markets is another one. Black Bull is a third one. It is not on the screen in here, but they are still paying out. They're doing it fast. Our experience with them is quite good. You can go and basically review all of these particular brokers in here, but definitely I hope that you're going to use multiple different brokers, and at the same time you can also see that they have pluses and minuses in here sometimes regarding spreads, payouts, for how much, for how long it actually takes. So again, the initial funding, transfer of profits, all these are obviously quite important. So when you're setting up new accounts, don't just look at the new EAs, also look at the new brokers. And then strategy selection, select currency pairs and EAs, as I said, that has shown similar success. That comes through your weekly or your monthly reviews for all these ones, and then incorporate the strategies that are within the market at the moment. So it could be a trend following one for one currency pair, like the US Japanese or the Swiss Japanese, for example. Other ones where you have a more versatile, but again, sideways trading. You can have your grids and then another market again for your scalping. So these are all the things that has to be part of the overall portfolio plan. Reinvestment plan also, as I mentioned here, implement diversified approach using multiple EAs. So every single time you open these new accounts, try to get either new EAs or try to get new currency pairs in here. So you have the minimum overlap of all these ones that reduce the risk and exposure to the Forex market and all the fluctuation that you actually have in here. and then monitoring growth, regular evaluate the both new accounts in here to prepare for tweaks in strategies. We do that a lot. We have a look at some of the bottom EAs for every single strategy and then try to lift them up again, then revise it, figure out which ones are working. The ones we can't get to work, we send them back to the hospital and revive them again. They become good, and then other ones are falling down the list. All these things is very, very important. So make sure that these multiple EAs that I have actually covered in these two videos in here, so they are a couple of suggestions. There's even also in the second video here a portfolio for the coupling service where you can get more details and information. We provide you with 5 links in here, good different EAs to diversify your portfolio. So that is one way of getting started. The other part is, again, as I said, monitoring and adjustment. Once you have set everything up, your work is definitely not done. The Forex market is alive very much with all sorts of different parameters coming in to affect it, and especially with the US tariffs going around in here, then you have to be very, very wary at the moment and also limit your exposure, for example, to the US dollar. So regular evaluation, so you have to do that both on the original accounts that you do and also on the new accounts that you are setting up. See which ones are working well, and you have to again adapt the strategies in here. You have to look at the market conditions. As I said, all of a sudden you want to get out of the US dollar pairs as much as possible, maybe only have one set per account in there, and then go for other strategies. These are very, very important parts. And some of the closing tips here is transparency with yourself when you're setting your goals. What is it that I want? How do I want to achieve it? And what kind of growth do I want to have in here? So that you try to set achievable goals. And at the same time, if you are a new trader, obviously it can be a bit difficult to figure out what is achievable and what is not. That's why community engagement comes in. So you can obviously always email me, or you can actually go to the community that I'm part of a member of, and so many other thousands of traders, Expert Forex, where we have a lot of forums. We're discussing the individual EAs, we are discussing strategies, we are showing our profits and our losses in here. So these are very, very important parts. They are also developing some of the EAs that we are doing a lot of videos about. They have a good forum in here where you can basically ask other traders what they think of certain strategies, what they think of certain robots, and all of this hopefully will help you also build your exact right portfolio so that you can actually profit for a long period of time. So I want to show you here the calculated example that I had before with the $4,000 and $5,000 accounts. This is obviously 20,000. You can either scale this down or up depending on your financial situation in here. But we have an interest rate. That means the robots is around 8%. So these are the best of our robots, should be able to achieve around 8% in here. We can see that over long periods of time that is possible. So that is 8% on a monthly basis. And then we compound the frequency in here. That will be on a quarterly basis. Based on the 20,000 we have in the beginning, you can then see that we are getting around 1,600. Obviously, these are calculated. Forex market is a bit more fluctuating up and down, but this is an average number. And you'll see that after about 3 months, we have about 4,800. So that is pretty much enough to set up a new account in here. And then that particular account turns up. So your new account balance is 24,800, maybe even 25 straight. And then from there on, next time, every single month, you are now making almost 2,000. And as that is compounding in here, you're going to take that and then add an additional account once again. And you're going to continue to do that. And this is after 12 months. You can see that your account balance has now actually gone up to 47,000 from 20. And if you then continue to do this, simply open up new accounts. At this particular time, after 13 months, you're at 3,700. So now you can almost do that on a monthly basis. But again, let's pretend we are doing it every quarter. You again drop in another set of money here. You're getting up to around 50,000, and from there on you will continue, and after 2 years the 20,000 has now turned into more than 110,000. That is the strength of compounding. If you can basically just don't blow your accounts in here, have an interest rate of around 8%. All of these are quite achievable numbers, so you're not going to be a millionaire tomorrow, but definitely this will grow your portfolio in the way that we like to see. So as you can see, with some smart portfolio management, you can actually not only grow your individual trading accounts, you can actually also compound it over time on multiple different accounts. That means also you're going to be spreading your risk, and then you can diversify even further by also putting these accounts with various different brokers in here. All of it is very, very good and safe portfolio management at the end of the day. And that's exactly what we are doing. But don't forget, you and you alone are responsible for your own trading, your own investments, how you are doing it. This particular video in here is simply just showing how high-tech investment has been doing this for years. It has worked wonders for us, and we're going to continue in the same way and manner in the future. If you have any comments, please leave your comments, or if you have any details that you think was not covered in this particular video in here, or you are doing something that we haven't covered in this particular video here, also please leave a comment in there. Otherwise, I hope to see you on one of my next videos. Until then, bye-bye.